the trading chart for Venezuela in years to come. Today we discuss.
Welcome to Venezuela Insider, the only place in Venezuela for expats, digital nomads, entrepreneurs, investors, travelers, and related internationals. For more information, venezuelainsider.com.
So you guys already know, if you're watching this from a while, that I love trading. The issue is that trading doesn't love me back. That's why I have to do, the old boring stuff like dollar cost average and due diligence and, cash flow things instead of just scalping, taking, a YOLO position and making a big return. So, and here we are. Now, today, we are gonna, let's say, put in perspective the trading chart for Venezuela, if you're a trader or if you like trading or if you are a long-term investor. But of course, we are gonna combine this particular, quote-unquote, hypothetical trading chart with fundamental analysis that, of course, if you know something about trading and investing, the fundamental analysis is more important than just technical analysis and doing Fibonacci sequences and looking for a breakout or any given price action and that kind of thing. So, we have to go yet again with the boring stuff. We have explained this a bunch of times regarding the 80% GDP collapse, and afterwards that halted on 2018. Then we started de facto growing on 2019, but then we halted during COVID. And since 2021 is that we're seeing sustained GDP growth, still lackluster compared to the 80% GDP collapse that we had on the first place. And everything has been combined, first with the political situation, first with the late Hugo Chavez, then with the 2 terms of Nicolas Maduro, and on the future. And I have to remember that this particular video has been recorded just a few days before the election outcome, and things can change. But still, we are going to try to cover on the trading chart both scenarios with Maduro on a third presidential term or with a new term of Edmundo González Urrutia, that is a center-right, centrist politician that is very pleasing for the West. But at the same token, he had some sort of a good relationship with other countries, like China, Russia, and that kind of thing. So basically, we had sustained growth of GDP thanks to the oil prices of crude oil, and also a sustained production of 3 million barrels of crude oil per day within the Venezuelan economy. Remember, the Venezuelan economy is tied with the oil economy, first thing. But at the same token, on this process, the private sector in Venezuela got decimated. And also we had policies, socialist communist policies, like price controls, capital controls, currency controls, and so on and so on. And that created a sustained, very hefty GDP growth until 2012. Back then, that was the highest point of the Venezuelan GDP. It was around $400 billion of GDP, something of that nature, a little bit less than that. Between 2013 and 2017, we had a collapse of GDP from hovering $400 billion on GDP to the lowest point that was $43 billion on GDP numbers. Then, after the first term of Nicolas Maduro as president, where he kept the same socialist communist policies, price controls, capital controls, currency controls, all of that jazz. And then he did a 180 silently in 2018, and then we saw sustained GDP growth. Of course, the oil production in Venezuela collapsed from 3 million to 400,000. That was the lowest point on 2020. Of course, we had COVID as well. And right now, we are close to 1 million barrels of crude oil per day. Also combined that the Venezuelan economy got de facto dollarized on 2019, and also the fiscal spending from the Venezuelan government. The Venezuelan government has been, quote-unquote, responsible regarding fiscal spending since 2019, something like that. So that reduced first, and the hyperinflation that right now plays second fiddle. The hyperinflation was between 2017 and 2021. But right now, the Venezuelan Bolivar plays a second fiddle on the Venezuelan economy. Everything is tied to the US dollar. So the standard for the Venezuelan economy is the USD. And then in 2019, of course, we had the sanctions against the oil industry, and that is hindering further economic growth. The sanctions did not cause the collapse of the Venezuelan economy. However, those sanctions are hindering, they are capping further economic growth for the Venezuelan economy. Of course, if Maduro doesn't continue as the president of Venezuela, and we saw a change on the executive power here in the country, more of a center right-wing politician, those sanctions most likely will be lifted. So right now, the Venezuelan economy has a size a little bit over $100 billion of GDP. That is more than twice of the bottom of 43 billion just a few years ago, right on 2020. It's a significant growth. However, it's lackluster compared to the collapse when we used to have close to 400 billion of GDP. Now, since most of this collapse was thanks to self-inflicted wounds, and those wounds have not been, have been eliminated, let's say, until a certain degree, the worst case scenario for Venezuela in the next 10 decades, let's say, if we put it on trading terms, this is the support of the Venezuelan economy. Right now, that support is over 100 billion US dollars of GDP. That's the quote-unquote support. So we're doing kind of like a trading chart right now. And the resistance of that particular channel is going to be the 400 billion USD on GDP terms. So basically, that's your trading channel. If you're a trader, it's going to be between a little bit over 100 billion and the support and the resistance 400 billion of GDP. Very good. That doesn't mean it's going to reach, it's going to be a sweet trade, like in Bitcoin, something like that. No, that's most likely won't happen. However, I know I have a particular scenario, a channel that is going to go between, let's say, the next 5 years, between 100, that is a little bit over 100, that is going to be the support, and the resistance. The next resistance is going to be around 200 billion of USD of GDP. So on this particular channel, that's where we are working right now. That's our channel, our trade, and right now is moving on that particular thing. So the most conservative estimate, first I'm going to talk about the consensus about the most brilliant economic minds within the country, the people that I listen a lot, that are way smarter than I am, and the worst case scenario for them is just getting stagnated a little bit over that 100 billion USD mark. My most conservative estimate here in Venezuela Insider, our most conservative estimate, is that we are going to start testing that particular resistance of 200 on the next 5 years. That is a conservative estimate. At some point between 5 to 10 years. So that will be that first channel between 100 and 200 is going to be the particular, that's going to be a trading chart. Now, on a very draconian, talking end of the world scenario, maybe on the next, let's say, couple of years, that particular 100 billion of support is going to be tested, maybe. Now, regarding the resistance of 200 billion, it's going to be tested. When it's going to be tested, that is the most important thing. According to some estimations, my own estimations is between 5 to 10 years. Meanwhile, if you are very bullish on the Venezuelan economy, especially with a change on the executive power here in Venezuela, that line can be easily tested just on a 2-year span. If that happens, sanctions lifted, and the perceived risk of Venezuela, I always mention this, and I'm going to explain yet again. We have the perceived risk of Venezuela that is very, very, very high, and it's perfectly understandable why this happens, of course. But it's a huge spread between the perceived risk of Venezuela and the actual risk of Venezuela, that still, of course, there is a risk involved. And, of course, every time that you're doing trading, investing in those sort of things, there is risk involved regardless of the asset class, something like that. But the issue regarding finance is that you need not to avoid risk, but actually manage the risk. So you have a big spread on this particular, the risk spread on this particular dichotomy, but that particular gap, that particular spread of the risk is going to be closing and closing and closing and closing. And when that particular risk gap starts to close, that's where you are going to see that the particular, the price action of Venezuela, in this case the GDP, is going to be start to test that particular 200 resistance. Now, the most optimistic scenario is that we are going to reach that particular 200 billion resistant scenario. We're going to reach it very quickly, just on a couple of years. And afterwards, we are going to see a test, and that's is going to become that particular 200 billion mark is going to become the new support. And when that support starts to be tested and tested again, in order to yet again reach something around 400 billion US dollars, that will be the new resistance. And then when I'm talking, let's say in a decade, something like that, and everything goes right, and actually there's a lot of probability that everything goes right, that's where we're going to go. And then when 400 billion becomes the new support for the Venezuelan economy, the possibilities within the country are, to the moon, baby. Diamond hand. Now, actually, I know this sounds a little bit funny. This is just, of course, this is just an exercise, a thought exercise. But actually, many big investors right now are doing the same exercise. For instance, recently, Barclays, the big financial firm on the United Kingdom, that I mentioned that have been doing a couple of reviews of the Venezuelan economy, just recently, just a couple of days before the election, did a revised outcome for Venezuela, and that particular gap of risk is reducing amongst big-time investors. The Venezuelan bonds, that you have two kinds of bonds, the sovereign Venezuelan bonds and the PDVSA, the state-owned company bonds. There is a spread between those bonds. According to most financial analysts, it should be a very marginal spread amongst these two kinds of assets. And right now, it's kind of a double between both of such assets. And I understand why. Now, apparently, according to bond owners and also bond traders, is that according to the positions that they are taking, this comes from Barclays, their particular analysis, is that the risk went from being there sold, cents on the dollar, but they went at some point 6 cents per dollar, 8 cents per dollar. Right now are trading around over 20 cents per dollar. It's a huge spread, still long way to go, but this gap is start to get narrow, and hence the risk premium that you pay for Venezuela has started to reduce as well. Now, Venezuela, especially those bonds, be careful if you are trading those particular bonds. I'm not recommending to invest in anything, let alone those particular Venezuelan bonds. However, that helps us to become an indicator on how is perceived the risk of Venezuela compared to the actual risk that you have here in the country. Now, the final thought is that Venezuela is risky. Yes, it is. Now, it's not as risky as most people think. And that particular gap, that risk spread, is closing year over year. Now, you still have to be careful. You still have to know what you're doing. You need your know-how. You also need the due diligence in order to play out, depending on your particular skill set and your particular know-how, how to play out some sort of way Venezuela in your favor.
Thank you for watching Venezuela Insider. Please like, share, and subscribe. Follow us on social media. If you want to work with us, VenezuelaInsider.com. Thanks again, and have a nice day.